Hello everyone and welcome to Day Trader S&P 500. Today is Friday, October 10th, 2025, and this is Dale Woodson, editor of Woodson Wave Report. Trying to get our YouTube subscribers more caught up with our newsletter subscribers, so I think this is the third or fourth one this week. We were going about once a month, but we'll try to keep you guys updated on a more timely basis. A lot to cover today. I want to get into our report today first to show you some things. October 10th. These are auto trade systems we've seen before, and the way it works is, well, let me just show you real quick first. Here's our most recent trades. We have three systems: ES and micro, E-minis, and financials, which are the financials, the bonds. We can get into that a little bit later, but here's our most recent trades. This goes back about 3 weeks, and you can see we've got 15 wins, 6 losses, and a net realized gain of $7,335.52. I do want to point out today with the E-minis, we got long and made money, and then we got short and made money. We did the same with the micros. We got long and made money. Well, we lost on that one. We lost $11. But we made it on the other long, and then we got short the rest of the day. So it was a day where you could make money on the way up and on the way down. The way down was much faster and lasted longer, but the way up was profitable too. So got to be able to trade in both markets, not just long or short, but both, sometimes in the same day. Okay, so the way this works is I'm not a futures broker, but Striker Securities is. Okay, you would open, here it is here, you open a futures trading account with Strikers, and they auto trade my trades for you in your account, which you open with them, if that makes sense. Okay, so that's the way that works, and this is where a lot of people are going here lately, wanting to get into the auto trades, obviously. Okay, there's our disclaimer, and nice decline today. This is an hourly bar. Maybe I'll go right to this with the charts. Might be easier to do it that way. Let's get into the ES. Would that be the hourly there? Yeah, there it is. Okay, from this August 1st low, excuse me, you have a 1 up, a 2 down. That looks like 3 up. It may not be, but for now it is. Okay, this wave 4, there's the retracement levels. You can see it came within, let's see, that got messed up there. There we go. Let's put this over here. Oh, let's make it bigger screen so we can all see everything. That's much better there. Okay, so the decline went to 65.40 and a quarter today, which was within 5 3/4 of a point of a perfect Fibonacci 618 retrace. MOB means make or break, always. Where is it wrong? This is not for if and when it goes below the wave 1 high, which is 65.0875. That becomes the MOB or the make or break. Okay, if it does, then it means that this move down is correcting something more or something bigger than this 5 wave. This is not even a completed 5 wave. It's correcting something more than this move up. Okay, we'll see if that plays out forward in 5 to a higher high. Doesn't look like that from here, but hey, we got to stay with the math, right? So let's get out of that, and let's say it does. Then we want to get to our hourly. If it does break through there, then we go back and we look at the daily from the April 7 low. Let me look at that. This is presuming that that make or break on the hourly chart is broken or will be broken. Okay, so we got 5 waves up on this daily chart here, and a Fibonacci retracement would give us these targets here. Okay, obviously it goes without saying, if it goes below the 48.32 low, that doesn't seem like it's going to happen anytime soon. You never know, but then we'll have something bigger. We'll have to go to a weekly chart or something. Look at that bar. That is something, isn't it? That is a nice daily bar. Let me see if I can get out of this. Bear with me a second. Okay, let me get back to, we're going to bounce back and forth here, back to the report from today. Okay, So that was a decline today again, within 5 and a fraction points of a direct hit on 618. There's that key level right here. We'll see what happens with that. You know, today the Dow was down almost 2%, S&P between 2.5 and 3, and the NASDAQ, of course, more. NASDAQ leads on the way down and leads on the way up. Go figure, right? Okay, so there's the verbiage there. And if it gets below 6508, then it's not for that move. This is complete. We'd have to relabel that. And that means we're correcting something bigger. So we'll look at the 1 degree higher on the daily chart. Here that is right here again. Okay. When and if that high was broken, wave 1 high on the previous chart, then this is what we're looking. And there are the targets there, ranging from 60.55 down to 52.55 and 3/4. Okay. And there's the verbiage of that there. We need to see steps to confirm a change in trend. We've been looking since April, haven't seen one yet. And all 5 of these, the 5th one's here, need to be met to be the first signal, the initial signal of a change in trend. We've seen it go to 3 and 4, but never through all 5, okay? So that's what we're looking at there. As we say, since we have not received the confirmation of a change in trend, then we remain long on the short term, the intermediate term, and the long term. And there we're long against those lows. That's at 8.1, that's at April 7, and that's at 2022 low. Speaking of, well, let me just show you guys right here. The sequence, the Fibonacci time spiral sequence from the April 23rd low has caught lows. They're not lows of significance. They're short-term lows, but up until now, they've proven a good place to get long from. The next one is 1014. And let me show you guys that on the S&P chart here. Not that one, not that one. This one. From that April 7th low. Here's that spiral. Here's all the lows, and it shows the next low at 1014, which is Tuesday, I believe. 2 more trading days from today. So we'll see if that keeps identifying lows, or if it doesn't. We will know. Okay, I want to get into, we're kind of jumping around here. Let me just check on the newsletter, see if there's something else that we wanted to get into. No, that's the low circuit breakers in case they trip this thing. Okay, I think that pretty much covers it. Yeah, we're looking at it from a more top down or bottom up, actually, from an hourly. If that's broken, then we go to a daily, and that's what we're looking at. Okay, let's get into the 10-year, because there's interesting things going on here. Okay, let me US 10-year, and let's make that full screen. Okay, here's what we're looking at here. We're looking at a wave 3 high there. This goes back to a long way. Anyway, back to 2020. But we have a triangle here. We have an A down, B up, C down, D up, and E down to complete wave 4. There's our trigger there. There's our next upside trigger. There's our next upside trigger. This is in US 10-year interest rates, or yields, if you will. Okay, I want to contrast that with, let me get over here into the 10-year Treasury TNote futures, okay, which is what I'm trading in the auto trades. I'll show you guys this here just to go back a second. If you see, where did that, yeah, all these trades here, bear with me. TNotes 10-year, okay, that's the financials. That's what we're trading there. I think everybody probably knows what the E-minis are and the micro E-minis, okay, with the S&P futures. But these are TNotes we're trading, and I love trading bonds. Had a lot of success historically with the bond market, and we're on it again. So this is what we're actually trading. It's the opposite of the interest rates, the 10-year bonds that we were showing you. Okay, that was interest rates, and this is prices. Okay, here is that 3. Now it's a low, and the other one it was a high, and we've got an A, B, C, D, E. Let me see if I can make this a little bit better for you guys. Maybe I'll get into a smaller time frame here. Let's see if we can get that to, let me get out of that. Let's go to hourly. Here we go, so we can see this break down a little bit better on that, what we are trading here. Okay, there's that E wave high of wave 4, and then we've got a 1 down in purple. Okay, yeah, I think it's better to see here. Then we have a 2 up, and it's right near the Fibonacci 618. Actually just went a little bit above it. So if we move this up here, there we go. It could still go higher. Where is it wrong? It can't go above this E wave high at 113.29. Okay, so we've got an A up, a B down, a C up for the wave 2. That should be, let me get that off a magnet so I can do that a little better. There we go. There we go. And there we go. Okay, so that should actually be there. Remove that. There. We've got a 1 down and a 2 up. 2 cannot retrace more than 100% of 1, so it can't go above this red line. Again, that's 113.29. So we're looking for wave 3, 3 gains equality with 1 here at 111.17.5, and it's a 1.618 at 110.15.5. So that's what we're trading on the bond market. Okay, so I want to get you guys back to the ES hourly and daily here to wrap this up. Okay, there's the hourly, there's that huge decline. Let's see if we can see that on, there we go. Yeah, on the daily chart, that's a big bar. Okay, but to take you through the progression, this is what we're looking at. This is the operating wave count. This is the wave 4 low. As of now, as soon as it goes below 6508, it's not wave 4, and this is done. Okay, we have to relabel that. We'll do that later. Okay, then if and when it does, then we get into the daily chart, and we're going to look at a retracement from the April 7th low. Okay, so a lot going on, especially, well, in the bond market and the stock market. These are huge declines, and like I said, the NASDAQ led the way on the way down. We're going to leave you guys with that most recent report here. There's all of our trades. If you're interested, again, you do a contract with Striker Securities. They are a futures brokerage. I am not. They trade my trades for you in your account that you open with them. Got a trading system and a money management system, and that money management system is what's keeping these losses low. Very important. More important to have a money management system than a trading system, but they're both important. But if you have a trading system and no money management system, you'll probably run out of money and stop trading. That's what 80% of the people who stop trading, that's the reason they stop. Okay, so it's very important. And there's that information there. Repeat, repeat. There's today's declines, and there's the bigger picture. Okay, we'll leave you guys with this for now, and hopefully keep giving you guys more timely updates on YouTube. And until next time, take care, everyone.